Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It's March 18th. This will be our chart lesson for today, and the craziness continues. What looked like was going to be a relatively orderly market early on turned out to just be another day in the ES during the coronavirus. So, um, anyway, we had a couple of legs. You can see the two legs down. We had one leg here and we corrected, and then we had another leg down. There's a couple different ways to look at this. First thing you want to do is measure this first leg on today's data only, which would be right in here like so, and then measure from here, and that gives you this first target right here. And you can see we hit that. But the other way you want to, if you continue on from there, the other way you want to measure it is this entire leg. And if you see, we measure that one and then measure from there. That gives you the second target, which we didn't make. But there's one other way you might look at this too. You might measure this first leg in here and then measure from where we really started down again, which is right there. It still gives you basically the same target. If you measure this whole thing, let's just see how it does. And you come and you start from right here. That gives you a little further target. So really, that first target, just measuring today's data, and then from this high right here, which is really where the downtrend started again. Even though we corrected a little bit here, there is two-legged correction here, but there's also one here too. So it didn't, they're really both very close. It's not going to make a whole lot of difference, but that gets you to our target. And early on, this really dark blue line here was kind of the line in the sand. That's where we bounced the last few times that we've gotten down here. You can see we didn't even quite get to it here a couple of days. I think that's been the low of all of the entire sell-off right there, if I'm not mistaken. We'll go back a few more days and see if we can. Well, this contract's not going to go very far back. So that is going to be the low of this contract for sure. I'm pretty certain. I got 21 days of data. We're not going to be anywhere near that previously because the market was rallying. So anyway, that's been kind of the line in the sand, and my fear if we got through there was we'd probably make a measured move, which seemed like hard to believe when we were trading up here earlier in the day that we'd see prices way down here. But you can see once we broke through there, it didn't take any time. We met that measured move in no time, corrected, made one more push to a low. And I guess the only good thing is that we did rally out of that fairly strongly. I mean, this low is down here at 22.62, we'll just call it, and we closed way up here at 24 something, basically 24. So, I mean, from 22.62 to 24, I mean, that's 100 and, basically 140 points, doing the quick math. So, that's a pretty good rally. And this was at 120 when we made that low, 125. So, less than 2 hours, we rallied 100 and, what I say, 140 points. I can't even remember what it was now. But at least we closed off the lows today. And pretty much closed on a nice, rallying higher. We closed on the highs off this rally. So, not the highs of the day, of course, but I mean that's I'll take that as some positive in the markets right now. Again, early on, it looked like it was, the market looked pretty orderly early on. We didn't have any just really crazy. I mean, this is some, this is relatively orderly. I mean, there's still some big moves here. Don't get me wrong. We're not back to normal by any stretch, but this is more orderly than what we have been seeing. Instead of 50 points straight up, 75 straight down, and 50 straight up. I mean, these are some big moves, but this is much more orderly than what we have been having. And you can see that until late this afternoon, we had some pretty good move. I mean, that's a fairly, I mean, it looked like we were going to sell off again, and then suddenly, boom, somebody came in and bought. So, you know, my only hope is, and I'm just guessing here, so don't take this for anything more than just me throwing out ideas in my head, because I don't want to sound like a conspiracy theorist, and I don't want to say something that's not true either. But I could see a rally like this coming when the insiders all know that the market's not going to trade, or the market's about to close down, and they want to get out. You know, they've already sold off and made a lot of money, and they want to get out while they can. So I could see something like that happen. Is this a big enough rally to know that? I don't know. You know, if they were told if some insiders were told that, hey, when the market closes today late in the afternoon, they were told that, I'm just throwing stuff at the wall. We'll see what sticks when it's all said and done. But I could see something like that happening, creating a rally, because and we were probably overdone. We had two measured legs down, so the market's probably overdone. This is probably just a rally. But it just seemed like it got really strong there at the end, and I went and looked. I didn't see any particular news items. Maybe something came out right in here that caused it to rally that I just didn't see, because I didn't look really hard. But I did glance at the news. I didn't see any kind of new news items or anything like that. So that's why my conspiracy mind started rolling and thinking, what made this rally like that all of a sudden, other than maybe it's just some oversell. We were oversold and it was time to rally. And that's, because we're definitely heavily oversold probably. So if you can get oversold in a market like this, that's the other issue. So, but anyway, that's what I saw today on the big picture. And if you narrow down in there, you can see the smaller, I didn't even mark the smaller trends late in the afternoon, but you can see early on here where there's a nice little tight channel here, and you got a trend up. And so I marked a few of them here early on when I first started trading this morning. And, I felt pretty good about all this early, like it was going to be maybe a quieter day, but didn't end up that way. And again, this stuff is pretty orderly until this is a really strong sell-off here. But and all these moves again are exaggerated from what we usually see, so don't take that the wrong way when I say orderly. That's just the word I'm using to describe that the market wasn't just 100 points up, 100 points down, 100 points up, 100 points down like it has at times lately. So that's all that means. So don't read into that the wrong way either. So, I continue to get a lot of questions about second entries and how to enter and stuff. So I'm going to go over that real quick, and then I'm going to call it a day today, and I'm going to get out of here. So, I see a second entry right here, just glancing at the chart, and I'm not picking this one. I see another one over here. I'm not picking these out for any particular reason. They're just second entries that I happen to see at a high level real quickly. We'll go to this one. We're working down here. You made a new low right here, so you count as 0. You're correcting, and then you turn down. There's your first entry, and then you start correcting again. You got to have another correction. If you just, like right here, you made a new low, count 0, you get a first entry, and it goes down until it makes a new lower entry, so you never get a second entry. All you get there is a first entry. So that's a first entry, and then the count starts over again. But here you get a second correction before you make a new low, so you get a second entry. So I'm going to back out here and show this very closely. When prices broke below this bar right here, somebody said to put an arrow over it because they couldn't tell. So there's your arrow. That's your signal bar right under that arrow. And so the way you would enter here is you have to wait for that bar to close. You don't know it's going to be a second entry until this bar completes and you get the break below it. But as soon as that bar completes, looking at that, you can tell that's a very bearish bar. You would go ahead and you place your order one tick below that bar, and you'd wait to see what happens. But this is the way it would look on the right side of your chart. And if for some reason it triggered too quickly and you didn't have time to get, most of the time you'll have time to get your order in. Right now there might be a few trades where you don't have time to get your order in, but most of the time you will. And you drop your order in there. It's a sell stop, would be one tick below that bar. And if prices tick below it on the next bar, it'll trigger your order and you'll be in the second entry and your trade's triggered. If it doesn't and it keeps going higher, then just cancel your order and you reevaluate and you wait for the next setup. So it's really that simple. And you see here that would have triggered and you'd have been out in a blink, and you might have even had a runner there. And then of course we get a big bounce here. So let's show you a second entry long. Here's a second entry long. All right, look, we made this high right here. We're starting to trend up. We start getting a little correction, moving down. Oops, we got a first entry right there. So let's see what happens. Then you turn down. All right, so now we're anticipating. Of course, that's not a very good signal bar right there, but if you had a really good bullish signal bar, I'd go ahead and put my buy stop right above that. If I'm looking to go long, I'm not, just assume here, we're not looking at the big picture, the context. I'm just showing you how you would enter on second entry. So would I want to go long here? Not in a million years at this point, but just assume that we would want to go long here. So you put your buy stop one tick above that bar and you see what happens. Oops, it didn't trigger. I still like the trade if it turns higher, so now I'm going to move it down to right here, one tick above that. Next bar goes, oops, we got triggered. So now we're in this trade. And we're probably already scalped out completely but notice that new high, you're working lower, and it broke higher right there as your first entry. Now, it could have just kept on going and made a new high and never made a lower high again. And if that would have happened, it would have just been a first entry, and then we'd be starting to count over wherever the new high was up here. But it turned and started making lower highs again, so we get a chance to make a second entry. And it would have been right there, and you'd probably already be scalped out of that today. Definitely by there. And it just keeps going higher. And we made a new high there too. So the count starts over, counting off this side, but you also, more importantly, the trend has been down, so we're really probably counting off the lows. Right there we had a new swing low because it's lower than that one. So that would have been a first entry short, but we made another new low, so the count's 0. So when it started going higher, when it broke lower right there, there was your first entry short. And we didn't make a new low here, so when it starts correcting, if it breaks lower below again, then we got a second entry short right here. So that signal bar is bearish. It's maybe okay. It's not the best I've ever seen, but you know, if the trend's just right and the setup's just right, then maybe you still want to take that one because it's mostly bearish. It's not a perfect signal bar, but just assume we decide we want to go short right there. We put our little buy stop one tick below that. And if it gets triggered, we put our safety stop one tick above that too, just to throw that in there to make sure I'm not forgetting that. Next bar, okay, we would have been in this trade on a second entry short. Probably would have already scalped out, but let's just see what it does. It just keeps going down. You probably wouldn't have got a runner on that one if there's 4 ticks in there, and I'm pretty sure there's at least 4 ticks in there. So market just opened back up again. It must be 3:30. But you can see the lines moving again. And that would have been a great trade. And if you could have got a runner off that one, that would have been a nice move right there, because that's 250. That's a 30 point. That's a 30-point move right there on a second entry short with the trend. It just doesn't get much better than that. And then notice we made a new low here, so you get another first entry, a new low. So first entry, and then you got another second entry here. That's not a good signal bar in any way. And you see by filtering it, it would have kept you out of that trade. And you don't even really get a good setup here either. It is off the key entry point. I will give it that. But other than that, you'd probably want to wait on a lower high here. And that's relatively bearish, so that probably would have been a good place to take your lower high. And what is a lower high? It just means that, notice you came down, you corrected, and instead of going up and making a higher high, higher than that one, you made a lower high. That's a good sign if you're looking to go short. It means the trend's probably reestablishing. And you could have gone short there, and you'd already have another trade in your pocket. And it's still working lower than it corrects. And so I hope that's clear. Here's another second entry right here. Another good trade right off the key entry point. We did have our first break, and we got a new low, but I'd probably take this one. Notice that swing. It's lower than that one. So you count 0. First entry short. Then it starts correcting. Comes back to look at the trend line and the EMA both acting as resistance right there. And that's the way it would have looked on the right side of your chart. Put your sell stop one tick below that bar right there under the arrow for you that want to see the arrow. And your buy stop or your sell stop would go one tick below that. And as soon as it's triggered, you want to make sure your safety stop is one tick above that bar. And then on this next bar, it would have got triggered, and you would have already scalped out of that. And you'd probably have a runner going still at this point right here, maybe. And it just keeps going, comes back, and see, they wouldn't have got your runner on that one. And you could have traded that all the way down to at least there. That's probably where I would have exited, because with that much stem breaking past that new low there, you know, you probably got to get out of there. There's another second entry when it broke below that bar, but I wouldn't take that, right? That was that important low, and this is really your signal bar here because it made the swing high. So this is just the inside bar, even though that did create your second entry right there. There's another second entry short right here. Notice that new low, it's lower than that one. So prices turn up, and when it breaks lower right there, that's a first entry short. Then it starts making another higher low. So hey, if we get a break lower right there, so you may put a sell stop. That's not a very good signal bar. It's kind of neutral. And then it breaks lower, triggers your second entry, and off it goes again. But that is a second entry short, and of course your safety stop would have went one tick above that. And if you have enough room, I'd want to put it above this very high swing right here, because that even gives you more protection. But you're probably not going to have much, you know, occasionally you'll see that when the market's more normal, but right now you'll probably be lucky if you can get it above this high and use your 8-tick rule. But I hope that was pretty clear to most of you. I mean, these are just the very basics, and you got to get this part down, or none of it matters. Because if you don't even understand how to enter the trade, or what a second entry is, and it's amazing how many people don't know quite understand what a second entry is. I get it; it's hard to describe, but part of the reason is people think there's something magical, and they expect them to be real difficult, and you know they think it's some secret. I don't even know how to describe it. You know, some secret holy grail or something, and they are. I mean, it's amazing how well they work, but they're nothing. They're simple. They're nothing real special. So they're not that hard to learn. You know, your first grader can learn them if somebody shows them how. So they're that simple, really. But they are hard to describe. You know, especially just reading it off a sheet of paper. So. But hopefully by showing it to you there, that helps a lot. But anyway, I'm going to wrap it up, and we'll come back tomorrow. We'll wrap this week up, assuming that you know, we'll play next week as it comes, if it comes. I'm just going to be shocked if they don't shut this market down, or at least limit trading sometime soon. We shall see. Obviously, they didn't end it. It didn't end at the end of today because we're trading again. So this is probably just a short covering kind of deal, and you know, anybody day trading had to get out before the close anyway, and there's probably so many people short right now that it wouldn't take much to create a short squeeze going into the close with all the day traders got to exit, or else they're going to be kicked out by their broker. So that probably played a big part in everybody getting out of this thing, because I guarantee you the shorts had really built up on this move down to new lows. So that's why another reason why you want to exit it a lot of times at these targets, just prior to them. Because look, if we bounce, maybe, let me just see if we even bounced earlier, if it's right on. I mean, that's pretty much dead on to the tick. So if you get out, you know, try to get out a little bit ahead of that, just to make sure that you can get out or close to it. You don't. Look, you know, you're not going to get 100% of every move, but if you can get 50% of it, you're doing good. And with this strategy, a lot of times you can get 70, 80, or 90% of a move. And that's great trust me, don't feel bad if you leave a little on the table. If you get 60, if you get half of the move, you did better than most everybody. So, but anyway, let's say you want to exit, that should be your target and you exit. Yeah, it went a little bit lower right there, but then look what happened. So exit right here, and if you can get a little more of this by getting another second entry set up, then by all means do it. And if you get a runner, then anything after that's gravy anyway. So, but by exiting here, you got as much of this move down, especially this move right here. You got as much of that as you could, and you knew about where it was going to bounce because we see this happen over and over and over and over. I show this every day. And sure, sometimes we come up short, sometimes we overshoot it like we did here, but you see, I mean, most people are not going out, if you didn't get out right here, is it worth riding out all right, let's say you would have exited 22.85 or even lower. Let's just say you would have exited 22.85, but you don't, and it starts correcting. You say, I'm going to ride it out to try to get a little more. Do you really want to let it rally all the way to 22 or 23.33 from 22.85 just to see if you can get some more? What if it does like here and it doesn't come back? So when you see these targets, take your exit, and if it does turn back down like this, you can just jump back in again. Find you another good entry, re-enter, get your scalp, and then everything after that's great. It's free. It's gravy. If you don't get a runner, which sometimes you don't, even in a good strong trend, you don't always get a runner. But on days like this, you only need one runner. And you might make, I mean, really in this market, you might make a month's worth of trades on one runner. Just a single contract. So keep that in mind. I mean, these are unprecedented trading times, and don't forget the flip side of that coin. As easily as you can make that kind of money, you can get wiped out plus some. So, don't get overzealous. Don't get greedy. The old saying about pigs getting slaughtered. You don't want to get, you don't want to be greedy and get slaughtered. And that's what happens a lot of times when you're sitting right here, and instead of exiting a few ticks early, you're trying to get a little bit more of it, and then suddenly it reverses and it's 50 points in the other direction. And really, it comes all the way back up here and probably takes out the original stops, only to turn down and go right where it's going. This market is so efficient. I mean, when it leaves stops behind like that on these moves where it doesn't come back and get break-even stops, notice where it came back just enough to get those stops, and then off to the races it goes again. This market, ES is efficient. Even in all this volatility, it's pretty efficient. And it probably always will be. So, anyway, 20-something minutes worth, and I hope it was beneficial to you. And we'll continue to see what happens. I mean, hopefully they keep the markets open. We keep trading. We've seen hints of maybe reducing the hours or something. But again, if this thing continues, it wouldn't surprise me. I mean, the last time I remember them closing markets was 9/11. If this gets as bad, or is perceived as bad as 9/11, and they may, well, I don't know what's going to happen. I don't have that crystal ball, but I just know that there's a chance they could shut these things down or limit them or something. So don't be caught off guard with that. But anyway, I'm going to wrap it up. We'll be back again tomorrow and wrap up our week and kind of see how things are going again tomorrow. See if we're getting better news or worse news, or if the market's trading lower, or we're still bouncing or going sideways. So it's going to be interesting. I don't think we've nearly seen the end of interesting times yet. So I'm going to wrap it up. We'll be back again tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.